Hey everyone, Ben Lavender here, New York's favorite British mortgage broker again. Just wanted to touch on one quick thing is that interest rates are not everything. Sounds silly, I know, but give me a second, let me explain. So those of you who are even actively shopping for a home loan are probably experiencing this, that a lot of lenders out there will advertise very low rates, but sometimes have an obscene amount of points or fees associated with obtaining such a low rate. And many times when you do the calculation, it could take a long amount of time to really recoup that investment, right? So we have to think about the bigger picture, not just the rate. Sure, it's great to have a low and tell your friends at dinner parties that you've got a rate with a 1 or a 2 in front of it. But at the end of the day, it might not make sense financially, especially in the long term, or even in the short term. Now, the other example is comparing FHA loans to conventional loans. So historically speaking, 99% of the time, FHA interest rates are about 0.25% lower than conventional. So to the uneducated consumer, think to themselves, okay, FHA is lower, then I'm obviously going to go for FHA. But wait, right? Because we have other variables to take into consideration. The most important one being mortgage insurance. So depending on your credit score and what your down payment is, the conventional mortgage insurance can be insanely cheaper than FHAs, sometimes as much as like 40 to 60% lower, sometimes even lower than that. So just because the conventional rate is slightly higher, when you compare or when you add the FHA interest rate plus the FHA mortgage insurance and then the conventional interest rate and the conventional mortgage insurance, conventional ends up winning more often than not. So again, keep those variables in mind when you're shopping around for a loan, and remember that rate isn't everything.